All right, good afternoon. Can you guys hear me okay? Hey, RJ, Jim, Raymond, Heinz. How are you guys doing? Usual gang here today. Hey, Scott, Vito, Bob, Julius, John. All right. Okay, well, let's see. How many of you guys actually made the event yesterday? Or excuse me, Thursday. Thursday. Looks like the overwhelming majority of you. Yeah. Okay, good. You guys can watch that recording if you want. I know a lot of you that are here have heard me speak quite a few times. So I imagine many of you already know a lot of that information. But let me do this. All right, we'll kind of fly through some of these slides real quick. I'm not going to waste any time telling you about, my background and all of that. You can watch that recording if you want to know more. But after we kind of get through a little bit of a glossary overview, I want to go into describing kind of where we're at in the process of transitioning. We've been working on converting everything over to Ninja Trader 8. And the first thing that we've gotten done, the first thing that we finished is the volume analyst. So we still have a number of other pieces of software to go. So I'll go into a little bit of background on that and kind of where we're at, what our kind of future plans are. And then I want to go over the trade that we took in the room yesterday. So you can kind of see, how all this stuff pieces together for some pretty amazing trades and pretty major reversals. So we'll go over that and then work our way through several different examples with all the different workspaces that I've created for the volume analyst on Ninja 8. We'll have tons of stuff to get through. So let's just jump right into it. And this is being recorded, you guys, so we'll get the recording up, and I'll send out an email when we do have that up. Okay, so before we get too far into it, I want to make sure that all of you understand the risks involved with trading. I'm sure many of you know all too well, like I do, but nonetheless, if you do not have a solid understanding of the markets and a respect for just how dangerous they can be, they will eat you up and spit you out. Do not trade with your rent money or your lunch money, because if you do, you will absolutely lose it. Being undercapitalized and trading with a very small account is probably one of the most detrimental things that any trader can do. It's probably the number one cause of failure. Okay, I won't be showing any track records or anything like that, but I will show a couple of trades. Well, one, and it wasn't a sim account, a simulated account. All right, this is me. I'm not going to go over all of this. Basically, the turning point for me was actually being able to start testing the things that I was working on, and actually, be able to do the back testing and statistical analysis that is so necessary in this industry if you're going to make it. And it's something typically 90% of people just kind of overlook or don't think about. If you don't really establish your edge and you know for a fact that what you're using has the potential to make money, then it's going to be pretty difficult for you to make money at all. So it's taken me a decade to get to this point, and I'm only on my first year of real money profitability. So this is my first year after a decade, 11 years. I developed the methods a few years ago. Well, I had pieced together the methods that we're using now. And over the past 3 years, I've been working with several different programmers. We finally now have a team here with two really brilliant programmers, one of whom started off as a client and then started helping me in the trading room, and then found out he was a programmer. And now he's helping us to kind of fine tune and refine all the stuff that we've got. So it's taken quite a bit of time to get to the point to where I had the tools and the methods that I knew that could make money, put them together through all the hundreds of different systems. I think I worked with, well over 300 different people, and probably built out and tested out at least 1,000. I don't want to make it sound like they were super complex or whatever, but most of the stuff that does work is really not all that complex. But when it comes to volume, It may look complex, but the things that we're doing with the volume to be able to get the data that we need to be able to confirm the areas that we're trading, we have to do some things to the data that is complicated. Okay, but the signals themselves and what they tell you, that stuff's not complicated. We went through all this stuff about, random versus chaotic. The markets are somewhat chaotic, kind of low complexity chaotic, but that does not mean that price action is completely random. Okay, price action can indeed be predicted well enough for a trader to make consistent returns year after year. I mean, we obviously, all of us know of tons and tons of different traders that make a living at this, and that's how they're making a living, is by identifying an edge that they can quantify and then trade over and over and over. And the only way that that's even possible is if market movements can be somewhat predictable. Okay, and then we went into all the details of how supply and demand affects price, and what supply and demand ultimately boils down to is volume. It's the changing hands of contracts and shares and options, whatever vehicle you're trading. But it's that changing hands of volume that actually creates price. And that's why volume is so important. And I think, a lot of people overlook it because it's when you try to apply it on intraday data, and I'll go over that briefly here in a moment, but when you try to apply it on intraday data, it just doesn't work. It doesn't help you, especially if you're looking at larger time frames like a 15-minute chart or a 30-minute chart or something like that. We'll go over the different problems, but I understand why people think that it doesn't work. If you just take the raw data, it doesn't work, but you have to massage that data and you have to turn it into something useful. So we talked about defining an edge, and what is an edge? An edge is it's knowing some degree or some percentage of favor in predicting one movement over another in the short-term future. So it's very simple. If you have 100 trades, you have 5,000 in your winning trades and 4,200 in your losers, then you have an edge. Okay, obviously we want a lot more than a 100 value sample size, but this is just a kind of a quick little demonstration of what is an edge. It does not look like this. Okay, this is kind of something we talked about. I think I probably spent way too much time on this, but I was talking about how when you use indicators that are based on similar inputs, you have multicollinearity. It's a kind of a statistical term. It is a statistical term that's pretty well known. It's a fancy word for recognizing and avoiding redundancy. You don't want to use indicators that have the same basic inputs and just add more and more of them. The more indicators that you add that are similar, and the more rules that you develop based on those indicators, the higher your degrees of freedom, and the more, that's just a statistical term for the number of rules that you have. Typically, the more rules that you add, the worse the performance. And I know that seems probably counterintuitive, especially when you're first starting out, but a lot of guys will sell these systems that it looks really fancy. You've got these fancy, awesome oscillators, and they're, secret sauce equations or something, but none of that stuff really means anything or matters. But when you start building all of these different rules on your fancy secret sauce indicators, and you combine all of those together, at the end of it, you're actually going to have worse performance than you would have if you would have limited yourself to just a couple with very few rule sets and conditions. What's wrong with using all the indicators, price-based indicators? Well, it's volume that creates price, okay? I was just trying to, Thursday, show you guys, especially those of you that are new, that volume is really the most important information. It's the transacting of volume that creates the price action. Okay, so we want to use price action also, but how it relates to the volume. Okay, not independent of. And I think once we go through some of these different examples, you'll see why that's the case. So let's do this. I want to go over this trade that I'm in right now. This is in a sim account right now. Actually, I haven't really been trading live since, I guess it's been a few weeks since we've been trying to get the volume analyst completely ported over and actually improved quite a bit. But anyway, I started trading live in, I think it was about the first part of December of 2016. So for the entire 2016 and 2015, I was trading a sim account after putting together all of these methods. I was trading a sim account to prove out that what I had been working on was actually capable of making money. Okay, so I had done it the wrong way so many different times, trading with a live account, not knowing for sure that what I was using actually could make money. And I just assumed that it did because that's what I was told. After spending all these thousands of dollars and buying all these different systems, of course, everybody's going to tell you that the system that they've created for you to spend thousands of dollars on is going to make you money. And if you don't make money, it's because you're not following the rules and you're not doing it properly. Well, I was actually doing it properly. It didn't work. There was no way to make money with it. All I did was lose money. I would have, strings of winning trades. I might go 2 days without a losing trade. But at the end of the day, when you're day trading and you're taking several trades per day in one market, the odds of you having an edge, unless you're doing some very fast order flow type scalping or something, if you're going for, typical 2-to-1 or 3-to-1 reward to risk trades, and you're trading 15, 20 times a day just in one market, you very, very probably do not have an edge. Because the fact is, there really aren't that many high probability movements that you can predict in each market every day. There just really aren't that many. So what I did was put all that stuff that I had been working with and spent all this money on, worked it into Bloodhound, created all these different systems that I could actually test and prove out. And, most of which were mechanical, because that's what I had purchased, were mechanical systems. And none of them passed the test. And I did some very, very stringent testing. And, that's just kind of the way it is. Most of the stuff that you buy, most of the ideas that we think are really good, successful, winning ideas, they're just not. And it's, pretty disconcerting when you put all this time and money into something and come to the realization that what you've been spending all your time and money on is pretty much garbage. So after doing that, I went back to some of the ideas that the guys were using at the fund that I was trading in Ecuador, trading at. They were all doing market geometry and volume analysis, kind of along the lines of Richard Wyckoff. I think the smallest chart they would even allow me to look at was a 4-hour chart. And then I went off on my own and, went down my stupid rabbit holes. But anyway, they were using market geometry and volume, but only on daily and weekly charts. And that's kind of where I got started with the idea that volume on intraday is essentially useless, because that's what I was told. Once I started adding those things back in that I knew worked, then I started to make some progress. And what I put together was basically multiple time frame market geometry to define our areas that we're trading from, and then using the volume and divergence to confirm those areas. So this is a trade that we took in the live trading room. So I'm going to kind of go through how this comes together and how we confirm that with the volume. And then we're going to go into example after example on Ninja 8. Okay, so this is NinjaTrader 7. When you get the volume analyst, you'll get both versions, NinjaTrader 8 and 7. In NinjaTrader 8, we've actually added a lot of different some different filters and a few different things that have really improved it. We've even added a little a backtesting engine into it, which is really cool, and a kind of condition builder. So when it comes to volume analysis, we've done by far the most intricate and precise way to look at volume that's ever been done. I don't say that with any hesitation. It's pretty incredible. It's taken me a lot of years to get to this point, but it's finally coming to fruition in a way that I think is probably needs to be taken off the market here, really. But anyway, this is a 5-minute chart. The numbers that you see, that's the volume analyst also. So remember, it's volume and range analysis. The volume analyst combines all of these different inputs, whereas before they would be each a separate indicator, each individual indicators here. So we have the raw volume, but with all of our algorithms and all of the conditions that we've created to find these different signals. We've got the raw volume, the relative volume, the density, which is essentially volume per range, relative density, and then range and relative range, and volume per second, which is actually pretty interesting. You'll see some pretty good examples of that when we go to this new bar type that we developed here. The cyan numbers are the wide-ranging bars. The number tells you, I know it's a little bit difficult to see on this chart, but this is my actual trading setup. So 16, that means that it's the widest bar of the past 16 bars. This one that says 51, it's the widest of the past 51 bars. The dark violet red color, that's looking at narrow ranging bars. Okay, this one that says 39, that's the narrowest range bar of the past 39 bars. Okay, so that's what the numbers are. But what we do to identify the areas that we're trading from, we do that with market geometry. It may seem weird. I don't know if you guys are completely brand new to all of this. I'm just going to assume that you are. Market geometry, when you first hear about it, it probably seems a little ridiculous to draw a bunch of lines on your charts and expect that somehow the market is going to, turn from one of those lines. It seems a little bit ridiculous, but once you've used it for long enough, it's pretty easy to prove out that this stuff is definitely not only valid, but it's essentially what governs the movements of the market. That's a pretty sweeping and massive statement to make, but once you've used this and you've been trading with it and actually making money from it, it's pretty self-evident that that's the case. Okay, so what we do, this is me just drawing, I've identified two major areas. Here we have supply and supply. Here is demand. And imagine that's where demand comes in again on that demand line. Okay, so this is essentially the trend line, right? But it's not your typical textbook, draw from low to low when the market is moving higher, and then from high to high when the market is moving lower, like Edwards and McGee's book, The Technical Analysis of Stock Trends or something like that. This is quite a bit more advanced what we're doing here. And we're actually drawing both median lines and the trend channels. So not only is it that we've moved straight down to that trend channel line there on a perfect little ABC, but it's also right where the center median line intersects that channel. So the bar where I got in is touching both of those lines there. And in fact, when I draw the smaller channel here that's downsloping, that's sloping against the trade, that bar is touching all three of those. You see that? All right, so that's how we identify the areas where we want to do business. Okay, that's one of the ways. We also use volume profile, and the fact that we can use this little tool and draw profiles even on hourly charts is a pretty massive programming feat. Otherwise, we would have, if we didn't have the system that we have with this profile, we would have to load a one-tick data series for every single chart that we have, and that would essentially crash Ninja. To be able to get the accurate volume profile, for those of you that don't know, you have to use tick data. And the only way to get that on a chart like this, on a minute chart, is either to record the data as it comes in or access Ninja's tick files. I don't want to get into all the details, but this was about the most complex programming feat that we've ever achieved, that little volume profile there. So this toolbar is one of the main things that we use in our analysis. We're using the market geometry to identify the areas that we want to trade from, and then we use momentum divergence. All right, I'm not relying on overbought and oversold stuff. I'm actually looking at the momentum of the moves, okay? Because there are some recurring patterns in momentum that actually do provide you with an edge. There's a lot that's written on divergence out there. Some people claim that they've tested it thoroughly, and it's like everything else. It's purely random. Well, I hold that to test it properly and thoroughly, you would have had to program out some pretty intricate pattern recognition stuff. And I've never seen anybody do it properly. All right, it took me well over a year just to get the algorithm for this divergence indicator sorted out accurately enough to where it does exactly what I want it to do, exactly what I tell it to do, so that I can actually test it properly. So we see these recurring patterns in the momentum, the volume, from the areas in the market geometry, often enough to get into some pretty amazing trades. All right, and we do that in the live trading room. So this chart over here on the right, this will be the last thing that I talk about, and then we'll go into Ninja 8. This is that new bar type that I've developed. This is the, we're calling it the RTS hybrid, and RTS is just range, ticks, and seconds. Basically, time-based charts, each chart has its own limitation. And if you've traded a thinly traded market and you're using something like a 30-second chart, you'll notice in the overnight, you see some bars that don't have any ticks whatsoever. Essentially no volume changed hands there during that time period. And when you start going into the morning session, the average range really amps up and you get these really wide-ranging bars. So when you compare the overnight to the day session, there's this huge variance between the sessions, which is one of the problems that we have with volume. But long story short, you don't really get the exact look to the bars that you want with tick charts, because with tick charts, you're limited to the upside in volume. You can only have so many transactions per bar. It's an exact number of transactions per bar. So you can't really see these buying climaxes and selling climaxes very well. With range charts, each range has the same exact size. Each bar is identical. So you can't really look at volume the way that you want to. You can't, identify those buying climaxes and selling climaxes as well as you can on a time-based chart. Okay, so there's good things and bad things about each. With this new bar type that I've developed here, I'm blending all three of them. Okay, so maybe you want to see bars that are all the same range until you get a huge amount of volume come in. And then you would allow for larger ranging bars, stuff like that. So you can make really any look to these bars that you want. But the reason that I developed them for myself was so that I could really see the volume signals much more clearly. Okay, with a tick chart, like I was saying, you can't really get the kind of signals that we're looking to get. When we're blending them, we're really able to find these just amazing signals in the volume. So we'll go into the details of these different signals, but we touched on this on Thursday. You guys remember the 2-bar pattern that we had discussed? Essentially, we have a big selling climax right here. This is a little risk to reward meter that we have built into the toolbar. Just move this out of the way. So we have a big selling climax right here, huge amount of volume, but the volume is so large that even when you divide it by the range of the bar, you have incredibly high volume per range. So we know that on that bar right there, we've already run into support. Okay, but that support is completely confirmed on this bar right here. Again, it's a very, very high volume bar here, but the range is now much smaller. So what does that mean? If the volume is just as high, I mean, it's really pretty close, but the range of the bar is less than a third and it's closing up off of the lows, what do you think that means? See, these are the ways you have to start thinking in order to really understand what's happening in the market. Big selling climax, high volume, but it's so high that it's very high volume per range, and then another very high volume bar with a narrower range that's closing up off of the low. You've clearly run into demand on that bar. And it just so happens that demand is coming in right where the market geometry says we're likely going to get the next reversal. And momentum is completely sideways here. So this little yellow line, that's double divergence. We've got a completed selling climax here, big climax followed by a churn bar. And everything is coming together there for what we've programmed out inside of Bloodhound. Remember I told you about Bloodhound? That's the tool that I used to help prove out what works and what doesn't, mostly what doesn't. That's what this tool here is, okay? We don't have this for Ninja 8 yet, but I've been talking with Jeremy and I'll be testing it this coming week. So we have the volume analyst working on Ninja 8. Our next thing that we're going to do is move the Divergences Pro over to Ninja 8 and then the toolbar. Okay, the toolbar is probably going to take a solid month, but we're hoping that maybe around, honestly, probably the end of February. I was going to say the beginning of February, but probably the end of February. We should be completely on Ninja 8 and even with Bloodhound. All right, so with Bloodhound, we're able to access not only all of the indicators, the volume and the divergence, but also the areas in the market geometry and do that from every single chart. Okay, and normally when you're thinking about back testing or doing any type of statistical testing in a trading platform, you're really limited to one chart. You can build charts inside of that chart but then you get into all sorts of different multiple time frame problems, not being able to see inside of that higher time frame bar, having to wait for that higher time frame bar to close, all these different problems. So you can't really test historically with a multiple time frame system like you would experience it in real time. Multiple time frame back tests historically will never match up to the real time performance. But with this, what we've done, we're actually able to do those multiple time frame back tests properly. Okay, so we're actually reading the signals from all the individual charts without having to run any of the calculations. What I'm showing you is, if you're new, especially if you're new to trading altogether, probably what I just said makes absolutely no sense whatsoever. All right, but the things that we've done are, well, they've never been done before. I mean, it's all completely revolutionary what we've developed here with these different reader systems and being able to access the data from other charts, from outside of those charts. It's really pretty incredible. But that's what that green line right there is. Okay, that green line from Bloodhound is where all of our rules have come together for that trade. Now, I'm not suggesting that this is 100% automated. Frankly, that kind of stuff just really doesn't work. But we can merge the two. We can merge systematic trading with discretionary trading and do very, very well. You don't have to go fully automated. In fact, you don't want to go fully automated. Most of us will never achieve that. It typically takes, the kind of uber nerd that 99% of us will never be to achieve complete full automation. My focus is on becoming a better trader, figuring out why the market moves the way that it does, why it turns where it does, which we've done already, and then execute. I want to execute more efficiently with more discipline, and I want to become a better trader. And that's really what trading is all about. It's about progressing and becoming better and better, keeping track of your performance so that you have something to measure against, so that you have a benchmark and you can improve. If you're not measuring and keeping track of your performance, then how are you going to improve if you don't have anything to compare to? We can combine some of the aspects of what we do in an automated sort of a way, but not full automation, okay? We're going to limit that to a kind of semi-automation where we still retain the discretion involved in whether we want to pull that trigger or not, when to turn it on, when to turn it off, kind of a thing. So let's do this. Let's go into some examples. I think I actually have crude right here. Yeah, so this was the swing high in crude on Friday, and we had turned up right at the open with about the most massive 5-minute bar I think we've seen in a while, right at the open. With the Ninja 8 version, we've added in a couple of different things that we can use to identify very specific areas and very specific signals now. Let me just kind of qualify that. So when it comes to identifying which chart we want to trade from and what rules that we need to use to confirm that chart, let me put it like this. It comes down to when you're getting into a trade, especially if you're trading the way that we do, when you're getting into a trade, you want to know what chart is your operative time frame. If you're trading with multiple time frames, then you want to have a clear idea as to which chart the trade is occurring on. I'm sure you guys, everybody works at this and spends a lot of time on trying to identify the trend, right? Well, the trend is always a function of time frame. It's always a function of what chart are you looking at and how many bars are you using to define that trend. So, for one person, the trend might be up, another person, the trend is down. It's all about time frame. So what we're trying to do is to identify the trend on whichever chart, whatever higher time frame, be that the 4-hour chart, the 1-hour chart, the half-hour. And then depending on which chart we're seeing the retracement on, for instance, right here, we have a nice little retracement, nice little ABC down. Well, that's about 58 bars for that retracement. So we would say that this retracement occurred on the 5-minute chart, right? We wouldn't say that that retracement occurred on the hourly chart because it's really only about 2 hours or 3 hours, 3.5, something like that. So once you've identified the chart that the trade you're attempting to get in is occurring on, the operative time frame, well, then you can have specific rules for confirming that trade on the faster charts. Does that make sense? So this is why volume is so important across multiple time frames. If you're using just one chart and you're trying to take whatever setup that you have that you use to trade with, if you're trying to take that every single time you see it on that chart, you're going to run into some issues. There's no edge there, because in certain situations, that setup that you're seeing on that one single time frame that you're using might be in some major conflict with another chart, and you have no idea because you've only got the one time frame there. You see, there's kind of a fine line with it, though. You don't want to have too many, and you don't want to have just one if you're using volume, especially. All right, so we want to identify the operative time frame and then use those faster charts to confirm the area. Let's just imagine that maybe this were some sort of retracement on the 20-minute chart, or the hourly chart or something. So if this were a retracement on the hourly chart in crude oil here, we would have some rules for the volume confirming that area, the end of the retracement, for the 5-minute, maybe the 2-minute, and one of these the RTS bars. Okay, so if that were the case, well, here we have volume divergence on the 5-minute. It's a rather small one, but once we start looking at a little finer, let's say a little more granularity here, it's showing up pretty well on the 2-minute, but we don't have any confirming supply coming in at this swing high. We've got the really strong reversal bar on a huge increase of volume. Okay, but once we go down to a little faster time frame, now we start to see what's actually creating that swing. Okay, this is the RTS that's typically fairly similar to the 2-minute chart, and then this one is even faster, kind of more like the 30-second chart or so. So that's the high at 9:35. That's this high right here. So we have volume divergence here, just in that last tiny little swing, as well as volume divergence for the whole entire swing there on the 5-minute and the 2-minute. And that last little bar that we have at the high before it turns down is that extreme churn bar. So it's the yellow bars are churn bars, meaning at a high you've got supply coming in, and then these little dark violet red are the extreme churn bar. So this is a bar where we have very clear, very high supply coming in right there at the high, you see? And this is the volume per second. All right, so on these different workspaces, I've added several different charts. I think there's 8 for each workspace, and you can change these or do whatever you want with them. So we have the VWAP, we have a Bollinger Band, just to kind of get some ideas to volatility, and the volume per second, and the volume for the RTS bars. And then on the 5-minute, just the relative volume, Bollinger Bands, and the VWAP. The VWAP, the volume weighted average price, is kind of the running summation average. I can't remember exactly how to describe it. It's a running average of all the volume, all the contracts traded at every price. Okay, the average basically starts here, and then it adds a period for every single bar. So it's a growing average, and it shows you the overbought and oversold based on the session volume. Okay, so we can use this to identify some reversion to the mean type scenarios if we're trending lower on a higher time frame, and then we're retracing back up into the upper bands on the VWAP, and then we get some sort of volume divergence or churn bar or something up in that second standard deviation area. Well, then we have a pretty good idea that we're about to be putting in a swing high. Now, the way that we're trading in the trading room, we're also defining those areas with the market geometry. So 230-minute chart. I'm using a 230-minute chart because it divides the session into 6 exact bars. Typically, we have exactly 23 hours for each session, and it's closed an hour. And that gives us 3 bars for the overnight and 3 bars for the day session. Before we were using a 240, but the 230 gives us, the exact same amount of time for each bar. So that's a 240, and then a tick chart that's similar to about the 5-minute during the day session. We've even got volume divergence at the high there in crude on the tick chart with a churn bar right at the high. You see that? So one thing I'll show you very briefly before we go through some more examples. And guys, I know it's 10 after 4 now, but I'll probably talk for another half hour at least, and then we'll take some questions for as long as you want. One thing I want to show you really briefly here. What we added was the ability to filter out some of these signals for the volume divergence especially, but we have several different conditions we can set here. So this is much more advanced for some of you guys that like to, do some testing and tinkering and whatnot. What we can do with the volume divergence signals is we can add in different conditions based on whatever signal in the relative volume that we have at the high or in the Divergence Pro as well. So we don't have that yet for Ninja 8, but when we get that, it's already baked in here. You can actually combine the volume divergence with the momentum divergence here. So we have all these different confirming rules that you can add. Just show me, for instance, like with a churn bar here, just show me volume divergence signals that occur with a churn bar at the end. So that's really pretty nice. And then once you have, set it up the way that you want it, typically if you're looking for supply coming in at the high to confirm the final swing of the volume divergence, you're looking at high density or extreme density or, a churn bar. Well, then you can actually backtest it right here from the indicator. We haven't completed this yet, but it's something I wanted to add for my own testing, but we kept it in for you guys. And what you can do is you can actually do a little simple back test here. We're going to make this pretty elaborate. Right now, it's basically just telling you, well, what happened over the next N bar, in this case, 10. I could say, well, tell me what happened on average over the next 20 bars after a volume divergence trigger or a volume divergence setup. So there's all these little different things that we can add in to make this really pretty nice. But when you turn it on and you click OK, it will run, and then you have a little file that'll spit out. So rather than having to know how to program and do all that stuff or use Bloodhound, we can use this to test out some of our pattern recognition stuff, you see. So in our TTP folder here, we have a little section for backtest now. And we'll add this into the Divergences Pro, but you can see it spits out a little CSV file here. So we haven't added in all of the information yet. Right now, it's just kind of showing you maximum favorable excursion, maximum adverse excursion. I've already got a list of things that we're going to add into this. So we're really just getting started with making this thing even more incredible. So now that we're on Ninja 8, there's so many more things that I've been wanting to do that I haven't been able to do with Ninja 7, because Ninja 7 only had 1 second time stamping for the bars. So we couldn't really do, the historical bid and ask delta stuff for looking really intricately into the volume, but we've already begun on that. I'm just trying to figure out a way to make the properties as simple as possible. But we're going to be adding in, volume delta to confirm the churn bars and the climax bars. There's all these different things that we're looking to do now that we're on Ninja 8, that we can make this thing even better. All right, let's go through some more examples here. I know a lot of you guys are working with 4X, and I have put together some workspaces here for 4X, which I think are really, really pretty nice. Before, me personally, I didn't like 4X so much. For one thing, kind of the slippage was incredible when I was trading it. Of course, now with all the FXCM stuff, you kind of think, well, might have been the brokerage taking advantage of me. But anyway, the slippage was so huge. I didn't have accurate volume data. It just didn't seem as nice to me as futures. But now with the volume analyst, we're not actually accessing total raw volume, real volume, but rather the total number of transactions. But even still, there's a lot of guys have done studies on this. I think they say it's about 93% correlated, 0.93. And when I'm doing the comparison between the futures and the 4X, I'm getting pretty similar results. Okay, the volume per second is not quite as accurate, obviously, because we're looking at transactions. So you would, expect that the volume per second would not be as accurate, but the actual volume signals on these RTS bars are really, really pretty incredible. So here I have the USD JPY. So the dollar yen. Okay, and this is Friday, and I've got it set up to use a 3-tick range as a minimum. These bar types are really pretty incredible. I've been wanting to do something like this for so long, and I finally, I was creating some new workspaces and trying to figure out what size tick chart I wanted to use for the different contracts. And, I just got so fed up with it that I finally broke down and spent 2 or 3 days developing out how to properly do this. And what I came up with was setting a minimum for each of the range, tick, and seconds, and then a maximum as well. But the maximum, because we can only have 3 properties for bar types, that's all we can do, 3 properties. But we can set the last number to the multiple for the maximum. So when the multiple for the maximum is set to 0, it eliminates the maximum. So what does that mean? Basically, all 3 minimums have to be met before a bar can close, or one of the maximums is met and the next bar opens immediately. So what does that mean in this case? In this case, it means that the minimum range is 3 ticks. So no bar can be smaller than 3 ticks. What is the maximum? The maximum is 0, so there is no maximum. We could have as wide a ranging bar as we want. Now I could set that to 5, and we would have a maximum range of 15 ticks. Okay, but for 4x, I don't want to do that because 4x, typically there's quite a few ticks in these bars. For the actual total number of transactions ticks, I've set it to 400 for the minimum. So at least 400 transactions has to transpire before that bar can close. And the maximum is a multiple of 9. Okay, so the 9 is, 9 times 400 is the maximum. And then for the minimum seconds, we have 90 seconds here. Okay, so 1.5 minutes, and then 5 times 90 for the maximum. So all 3 minimums are met, next bar opens. Or one of the maximums is met and the next bar opens. Like I said, you can make this into whatever type of chart that you want. You could make it typically like a tick chart unless the bar plots too quickly. So you could, also make it like a range chart where each range, how with Renko bars and range, sometimes you get 5 or 6 bars that plot instantly. Well, now, rather than doing that, you can put a minimum number of seconds so that it's, always going to act like a range chart unless the bar closes, too quickly. So you can have a minimum of 2 seconds or 5 seconds or 10 seconds or whatever. Okay, so it's really, I don't know, not to toot my own horn, but it's the most, I went through so many different iterations of how to design this, and this is the most useful and efficient and customizable method that we could possibly do. But yeah, it's pretty amazing. So what it allows you to do is to, I don't have any statistics to give you right now, but from what I've seen and all the work that I've done over the past month or so since we've had these, the volume signals that you can isolate because of this bar type are pretty incredible. Here we have a volume divergence, higher volume coming into the high here, sign of weakness, and then lower volume going into the high. So higher volume here, lower volume here, and it ends on that nice, perfect little churn bar right there. Remember the 2-bar pattern we were talking about, where you get a selling climax, and then you actually run into support, which you start to see on that next bar? That's the low of the day right there in the yen. Or what about this high at the VWAP? You've got 2 churn bars back to back after a climax. And when you compare this to the 2-minute chart, which is what I'm essentially, trying to emulate, you've got a churn bar at the low, so that's pretty nice. But you don't have the 2-bar pattern, and you don't have the churn bar at the high. I'm not going to try to compare these too much. You can really make the RTS bar look however you want, but the way that I have them set up is to better identify these buying and selling climaxes. Okay, so I have one That's more like a 30-second to 1 minute chart, which would be the fastest chart that we would use to confirm, some of the smaller setups, like some of the setups that may occur on the 5-minute chart, and then one that's more like about a 2-minute chart, which would help us confirm setups on maybe the 15-minute and the hourly. So this is the low of the morning in the yen, nice fat little churn bar right there. And this is the 4x. So this is not even the pure raw volume. And we're still able to get some pretty nice signals here. So let's go through a couple of more. We've been through the 6E already, but you can see the low that we had just after this little retracement. So we had the volume divergence swing low on a really fat churn bar there on the 5-minute, which is right where I got in. And yeah, it's a volume divergence there on the 5-minute, but even on the faster tick chart, just in this last bit of the wave here, this last little wave, and this is what's so cool about multiple time frame stuff, you even have a volume divergence there. Now the scaling, the volume analyst will auto scale to kind of chop off the tops of the bars, so you can better see the variation from one bar to the next. If it does that and it's chopped off, quite a bit, it will plot a number here and tell you, if it goes way above that bottom fold there, then it will tell you how many contracts are actually making up that bar. But here at the very end of it, you have a little churn bar right there. I was actually getting in right on the area on the 5-minute, which was, I think, just a few ticks from the low there. Yeah, just a couple ticks from the low there. I got into 20, and then I took one off right in here, just before it broke that little high. So how did it end? What's the end of that move? It's just amazing stuff to me. Even creating it and working with it as much as I do, it's just incredible to me. That's the high of the morning, buying climax. You put the real volume on here and you can't even tell. But here it's a buying climax, it's high density. It's even an extreme spike. So these little objects we haven't talked anything about, but these are showing you just the degree of the height of the volume. Okay, the signals themselves, the extreme climax or extreme churn or churn, it doesn't really give you a complete picture as to how much larger that volume bar is relative to the previous ones, but the spike objects and algorithm will tell you a little bit more detail about the actual signal. So this is a pretty massive bar when compared to the previous 10 or 15 bars here. Nice volume divergence, really huge volume divergence. Turns straight down all day, right? All morning. And then how does it end? It ends after strong momentum move. Significant volume. It's not huge, but it is a spike in the volume. Sign of strength, goes back down, waning momentum. Very strong momentum. You don't even have to have a momentum indicator to see the momentum. You can just, draw a trend line or something, connect the high to low, and then do it again here. And you can see it's waning, right? So much less momentum here than here. You get that fat, massive churn bar, closes up off of the high, and then you're turning up thereafter. And when it comes up and it gets right back close enough to this high, you put in another churn bar, and then it turns back down. And where does it end? It ends right here. And I'm not cherry picking this stuff, guys. This is Friday. This is yesterday. You see this over and over and over, or at least we do. We see it. So you've got a huge churn bar here, marking the end of that. And now it's turning back up. Hopefully, when it opens up tomorrow evening, it'll start moving higher. Ultimately, I want to get back above that high there. You see here, this is the hourly chart of the euro. What marks that low there? Huge volume divergence, really massive one. What marks these two lows here? Another really fat volume divergence right there. This one's pretty interesting because it actually closes up off of the low, up near the high. So you know for a fact that you've run into major demand on that bar. And then we start the next big bull move. And what's the major high that we've had just before yesterday's low? Another volume divergence signal right there. So I think it's probably one of the most under-recognized and underused patterns that there are. But it's such an important confirming pattern that I'd say it's probably one of the main reasons why I've been able to do as well as I have. It's because of that, this main pattern. So this is the 2-minute chart, and there you see the extreme turn bar, which is the last bit of that 5-minute bar here, right? And then you've got a 2-bar pattern here on the 2-minute, big buying climax followed by a churn bar. What happens? If you saw that in real time and you weren't using volume, what would you think? Maybe it's about to just, go right on up, right? Well, we see that, there's no way that we're thinking, well, it's probably got to come back, do a retracement, go sideways for an hour or two, and then go. Can I explain the volume divergence? Yeah, let me see if I can put it into a little more succinct sort of a thing here. Let's say typically when we're talking about volume divergence, we're looking for an already established trend. Usually, this is kind of what goes back to the original idea for this pattern for me, was basically when we're talking about identifying the end of a trend, a trending move. Let me see if I can draw this out for you here. So if we're moving up, we've got a new uptrend. It's just been coming down. We've put in a new uptrend. We've got that first major high or low here. The momentum, is pretty strong on this first wave, but here on this wave, we get really strong momentum with very, very high volume, really high volume. And right at the end of that move, we get some dramatic climactic volume, okay? And then we start to move lower. And then when we go up and we make a new high, we do so on waning momentum. We're not moving up nearly as high. We're not moving as high nearly as quickly, at a much lower rate of speed in momentum. And by the time we break this high here, we have much less volume. So what does that tell us? At this point, huge amount of volume, right? We've got a ton of participation. We've got a lot of buyers driving this thing up. Ton of volume, right? We've obviously run into some resistance because it's put in a high and it's started to move lower. But now, once it finds support again and it goes back up to try and reestablish that bull run to go into a completed trending move, it can't do it. It has waning momentum. Typically, that's what we're typically looking for. That's what we're hoping for. But the main thing that we're looking for is a dramatic reduction in total volume as this thing tries to move higher. And that signals to us that we don't have nearly as much participation, and there's a lot less buyers involved in here. A lot fewer buyers. Does that make sense? So a ton of buying going on in this move right here, right? We don't want to sell that. It just so happened to put in a high and retrace some, but we don't want to try to sell that because it could just, keep right on going with that kind of momentum. But when it tries to go higher again, we have much less volume. So the buying in this case is obviously drying up. And then once we test that prior high on lower volume, we have our volume divergence signal, and we know that we have a much better chance of the market moving lower at this point because we've already seen now a sign of weakness. So at this point, if we were to try and sell right here, well, frankly, that's kind of dumb. I mean, unless it's just that you've put in a major swing high way back here and you've come straight back down, and this little movement here is just a quick, fast retrace, then, you know, that's one thing to sell something like that. But if this is a new all-time high of the past, whatever, several days or 1,000 bars or whatever, and you're trying to sell that, well, that's just ridiculous. You've got no attempt at moving the market lower. You got no sign of weakness whatsoever. You want to wait, see that sign of weakness, go back up, test that high, lower volume, less buying. You know that you've got a much better chance of the market moving lower at that point. Does that make sense? Matt, it not only works in swing trading, it works exceptionally well. I mean, that's kind of my preference is to swing trade. But since I've been running the trading room, I find myself, you know, day trading much more over the past year. So yeah, let me just show you some swing examples. I mean, this is a 30-minute chart right here of the euro marking that high. And that's what's so awesome about this with multiple time frames. You get converging patterns that come together. I mean, you've got the high here. This is a pretty good example of it, actually. I imagine the hourly chart has an even better one. Let's see. Yeah, it didn't quite. If this were all, if you counted all of the volume from right here up within those couple of few bars there and compared it, then yeah, you would have volume divergence here. You obviously have waning momentum. Doesn't get any more obvious than that. I mean, you've got a huge, strong momentum move and then a sign of weakness. And then you go back up in this choppy kind of a fashion. The only problem here is that the volume is kind of spread out over a few bars, so it doesn't quite get picked up. But let me go back to this 30-minute example here. So this maybe illustrates fairly well, maybe not quite as well as I would like it to. This is pretty high momentum, but then again, so is this. It's just all on one bar, and it's a huge amount of volume here. That's what I mean by the use of multiple time frames, why it's so important. Yeah, that's pretty good, but all right, let me just show this one example here. So you've got the big high momentum, high volume move up into the high, and this is a really, really great sign of weakness here. Why? Because it moves straight down very quickly. So it retraces, what, 85% of that last move that was such high momentum. It did that immediately. If I see something like that, I'm on the lookout. You've got an obvious momentum divergence here over the whole thing, but that last little push up, huge amount of volume, immediately met with selling that's maybe not quite as fast. I guess it's about half as fast, but it retraces all of that within 2 bars. And then when you go back up, you've got this kind of a choppy action back up into here on much lower volume. Look at the size of the volume right here. It's very low. It's below the average. So we know that the buying has essentially dried up there. But what else do we know? Just look at the 5-minute chart over here. What else do we know about this little high on the 30-minute when we look at it on the 5-minute? Hang on a second, that's 8 o'clock here. What am I doing? November 30th. Seeing things that aren't there. 8 o'clock, that's got to be this high right here. 1127, 755. Yep, that's it. So we even have a little volume divergence signal right there on the 5-minute. Very high volume into this high, comes back. It's maybe not quite as clean, but the algorithm is still picking it up here. We still have the volume divergence signal here. and we're back up into the second standard deviation, right? We're above the Bollinger Band. We're above this Bollinger Band, which is actually sloping down. All right, so we had just kind of gone into a narrowing, weakening volatility kind of a movement here. And then we go up, break above it, volume divergence, up into the extreme overbought here on the session, get the volume divergence signal, and then turn right back down. And we don't really even get any kind of support until right in here. And I don't think that even, yeah, it just knocked it sideways for a minute. I think this was the low of, no, kept moving lower. Yeah. Yes, quite a few of them, Adrian, and you can filter them out, or well, you can in Ninja 7 with the Divergences Pro. I was going to say we might build something in directly into the Ninja 8 version. I'm still kind of figuring out what all I'm going to add into this, but it's going to be pretty elaborate. And everything that I do for you guys, I'll probably change this in the future, but everything that I do in the future will be as a free upgrade. Okay. But yeah, a lot of them will be momentum divergences as well, and you would actually prefer that, right? But not all of them will show up as a momentum divergence, but yeah, you would definitely prefer that. All right, let's show another couple of workspaces here. Somebody wanted to see the pound the other day. Let's see, this is the pound. So these are, yeah, this is where I was going to kind of go over a little bit about the RTS bar and how I'm trying to mimic the 2-minute chart. So this is the Forex. Again, this is the pound USD. And this is Friday's session. This is the high on Friday. So with the RTS bars, if we plotted this volume on a tick chart, I mean, most of you guys understand that the volume for the Forex is not accessible, right? We just have access to the total number of contracts traded. So the volume that we're putting on here for the tick charts is not volume, it's total number of contracts, total transactions. So if you're using a tick chart, then the volume is going to be, identical to the tick chart, the value of the tick chart. So the volume will just be flat. But with these RTS bars, we can have, we can make it to where it's emulating a tick chart for, the better part of the low volatility portions of the market. And then when the volatility picks up, it will start to act more like a time-based chart. Okay. So when you see here with these RTS bars and you look at the volume, sometimes you'll have areas where the volume is completely horizontal there, you see? And that's, the typical period where you would have lower volatility. Okay, but then when the volatility picks up, you get some faster movement. You're able to get, the buying climaxes, the selling climaxes, the churn bars. You're able to actually identify those areas where demand is coming in at a low, as it is in this case, or supply is coming in at a high. This was, I think, I can't remember exactly what was happening. They had some sort of announcement with Congress, right? Flynn and taxes or something. So we had a ton of movement right around 10 Central. And, you're actually able to pick that up with these. You can make it act more like a tick chart at times and then more like a time-based when you want it to, So this is a big buying climax. You have the news here. It goes back up. you've got the obvious supply coming in there with that churn bar right here. And then you get the sign of weakness. You go back up, test that high on lower volume for your volume divergence swing high there of the morning. We have little volume divergence swing highs here, ending on a churn bar. After it's going, basically very low volatility here. It's actually really pretty cool on Forex. I was kind of surprised. I typically don't look at Forex. I do the Forex futures, but anyway, yeah, it's pretty nice. Really strong buying climax. It's actually two of them back to back, and then a really nice sign of weakness here. And then you go back up on waning momentum. It's not quite, within 2 bars, but you get the buying climax just barely, as it's just barely above the minimum tick value. And then you get the churn bar there. And then what happens when it starts to move down? It does so at a higher rate, higher volume per second. And you don't even get any support coming in until right here. You see, you've got this little churn bar, but that's as it pulls back into the VWAP. All right, this is where your first real support comes in after you take out that low. Then you get the sign of strength, come back down at a lower rate. You get the little tiny selling climax and the churn bar right there. And then it turns. It's really pretty amazing stuff. Yeah, I haven't tried that yet, Brad. I don't know. I'm kind of suspicious about that Forex volume data if it's only from one bank, It sounds like it's probably not going to be very accurate. But anyway, the total number of transactions, I think, what do they say? It's like 93%. This is, on a swing trading chart. This is an hourly chart. Here we've got the most recent, really major swing low that we've had in the pound. And what is it? It's a big selling climax, high density selling climax, followed by a churn bar. And then this has got to be out of some kind of report or something. Not necessarily. And then the massive high momentum move up. And what marks the high on the hourly chart? You've got the volume divergence pattern there, you see, with a really fat churn bar at the high. So we could do this really all day long. And this is just looking at, one day, Friday. Let me just look at gold really briefly, because it did have a really, really nice low that I probably would have taken if I wasn't in the euro. So this is the RTS bar on the right, and this is the 5-minute bar on the left. All right. Here at this high, at this low right here, obviously. Let me blow this up a little bit. Demand first starts coming in right here, obviously, with the big churn bar. You get a really nice attempt at moving higher, but you come back down. It was a little volume divergence here, but it's not picked up because this was all very high volume as well. So it's kind of skewing it just enough to not pick it up there. But here we have increased volume, quite a bit of volume right here, right? But it's closing up off of the low. So we know that at least the last portion of that very high volume is buying pressure. And then it turns up dramatically. And then how does it end? What's the end of that move? It's clear supply, churn bar at a high, clear supply. It almost looks, it looks quite a bit like the euro. Anyway, so this is the volume divergence swing low, the Thursday. Volume divergence swing high on Thursday. Got a little tiny one here in the overnight that failed. Got a little one here that did go up into a nice little buying climax. And this is on that new bar type. So in the overnight, very low average volume, and then it starts to pick up as volatility picks up. All right, we could do this really all day, guys, but it's already almost at 2 hours. Let me get to some questions, but first let me show you how you can get access to this. So what all this is going to include for you guys, you'll have the volume analyst for NinjaTrader 7 and NinjaTrader 8 and all future updates, upgrades, which is, I don't know, for me, I guess I'm just so obsessively compulsive about this stuff that it's always getting better. So sometimes it takes a little time to work out all of the details for something amazing, but it's really been getting better and better and better now that we've had some breakthroughs in Ninja 8. So you'll get all of those updates and upgrades. Right now we have, I think, 6 major workspaces, and you can save any of these workspaces as a new name and simply change the chart type, the instrument here. And one thing that we are going to include, which will probably be one of the first updates, upgrades, will be this profile per bar indicator that we've been working on. So we have to figure out with NinjaTrader 8, in order to show the volume profile data or the bid and ask data, you have to turn on this tick replay stuff here, which essentially loads this tick replay right here. It loads basically like a 1-tick data series for every single bar. And that takes a while. And if your indicators aren't programmed to be able to take that, then it would crash your Ninja and you would have, all sorts of problems. What we did with Ninja 7, which was just really difficult, time consuming. It took about 3 months to figure this thing out. But you see how fast that was? This is an hourly chart. You see that? Let me do that again. This is our volume profile for Ninja 7. It's the only one of its kind, because this is supposed to be impossible to do this. But we figured out a system to be able to take the data. It's like a hybrid system to be able to take that data without having to load the 1-tick data series, to be able to access that tick data. Okay, so we can do that with Ninja 7. It was a huge process, but with Ninja 8, it's a little bit different. So it's probably going to take a little while. But this profile, a little while, I mean, maybe 2 or 3 weeks to completely sort it out to where we can use this on hourly charts or 30-minute charts. So for everybody, for right now, nobody's able to use a real tick level volume profile on very large charts. You can, but it just takes a while to load, and it's going to be pretty intensive. The way that we're going to do it when we add it into the volume analyst is going to be, as resource light as possible. So we added this little bar type with the, this little chart style with the bar type. It's just an open, it got rid of the open. It's just a high-low close. So it's HLC right here. Okay, so we added a new little chart style, which I got, the idea from TradeStation. I used to use TradeStation about 10 years ago, 11 years ago. And I just liked the way that their bars looked, so we made a version of that. But you can take this little bar profile and mark the point of control of the bar and or the value area or the volume cluster. You can set that percentage to whatever you want. The top 20, percentage of the volume or 30% of the volume, that takes up the tightest range, 20% of the total volume within the least number of ticks. So we're going to use this to, add in a filter, like for this. Look at this. This is a climax here. It did turn down. It didn't, it wasn't a major swing high, but this is a big buying climax with the point of control at the high of the bar. So it's going to be especially useful for filtering out climax bars. Here we've got a big buying climax with point of control, volume cluster at the high. Here we've got a big volume buying climax with the volume cluster, point of control at the high. Here we've got a big selling climax with the volume cluster at the low, but the point of control is actually up in here. So we'll have a filter to where you can, make it to where the volume cluster has to be centered around the point of control, or you can separate them. I like to keep it separated so I can see, if the volume is more spread out. In this case, the volume is a little bit more spread out, but we obviously had clear demand coming in at that low. And this little tool will just, help you visualize where the majority of that volume has traded within that bar. Okay, so this is going to be a really, really nice addition. I may just have it as a free download for you guys with the Volume Analyst as a separate indicator first, and then maybe that'll be next week or something, but then we'll add it into the Volume Analyst and do some filters. So that's one of the things we'll be doing. I'll also be adding in volume delta per bar, looking at the total number of buying volume versus selling volume. So this is the sales page here. Let me reload it. All right, so I want to put this in the chat. Yeah, I'm not exactly a marketer, guys. My main focus is trading and developing the tools that I need to do that more effectively. And unfortunately, it costs, several salaries every year and a ton of time, obviously. Unfortunately, I kind of have to sell the stuff. Well, it's not unfortunate. I mean, it helps you guys. And that's really pretty rewarding as it is to be able to watch you guys actually improve and become better traders in the trading room. It's really pretty amazing. But you can, search us on Google Maps. There's a ton of reviews there. There's reviews on Facebook. Get an idea as to, what kind of people we are. This is the recording from Thursday. And this link right here will take you to the purchase page. All right. It's going to be 25% off until Wednesday night. And then we're going to go back to the standard pricing. Between now and then, it's going to come with that RTS hybrid bar. So for now, that's going to be included for free. And what we're going to do over the next, I guess about 2 months or so, just for the volume, is we'll have at least one training session a week, live training session a week on the volume in the afternoon, typically a Tuesday or a Thursday. But next week, basically what I'm going to do is this. I'm going to record, because it is, fairly brand new for NinjaTrader 8. We don't have a lot of the videos. We do have a pretty nice getting started guide. You'll be able to hit the ground running with all these workspaces. Everything's ready to go. Really detailed training in a video format. We've yet to have time to create that. So next week, I'm going to crank out at least one 15 to 20 minute video per day. And then I'll send that out, and then we'll do a training session the subsequent day on that topic. So we'll probably have about 5 or 6 main sections that we'll get through, one per day, every day this coming week. So I've dedicated myself to do that for you guys Monday, Tuesday, Wednesday, Thursday, Friday, every afternoon after the close of the market this coming week. So that will begin Monday, but you'll have until Wednesday to get it for $450 off. That's including these workspaces that I've shown you. I'll probably get you this little profile per bar indicator, just, if you want it within the next week or two, just as a separate indicator. the bar type for both Ninja 7 and Ninja 8. All of these workspaces I've just shown you. And like I said, you can save these as, other names and add different instruments and whatnot. 4X, different futures, and the same for Ninja 7. And then all the training. So let me put the link in one more time, and we'll send out the recording. You guys are able to see that? Yeah, Frank, we do have a live trading room. That's what we're doing every single morning. I'm going to start running the trading room again with Josh. Josh is one of our programmers who started off as a client, just became, really good at the analysis, started helping me run the trading room and signed on with us. Now he's been running the trading room for the past couple of weeks. And like I said, I'll be joining him. I joined back with him yesterday. So typically he and I kind of run it together with a handful of other members. So we've got, I don't know, I think about 40 members or so. And there's 4 or 5 that will, jump on and point out some trades or talk about a certain setup or something like that. So there's a lot of us that kind of work together to identify different trades that are setting up. But in order to be a part of the trading room, you have to have the full methodology. So this, with the volume analyst, is a way of getting you guys in the door at a lower cost. And then from here, you'll be locked in at the current price if you want to upgrade at a later date. I'll include that in the email when we send out this recording. But essentially my intention was, with this, now that we're starting to move to Ninja 8, after we move to Ninja 8, it's going to be quite a bit of, it's going to be a huge improvement, first of all, but we'll actually have quite a bit more elaborate, how should I put it? Basically, right now, our methodology, we've got it, all written out in, I think it's about 7 or 8 different PDFs and training videos. Okay, I might have, I don't know, over 300 hours of training videos. There are maybe 10 or 15 main ones that you would need to get through, but it might take you 20 or 30 hours to do that because those training sessions were so long. All right. What I'm doing starting now is to condense all of that into the smallest, shortest little sound bites that I can, basically 5-10 minute videos each, so that you can get through all of the training at a much more rapid rate. And once we get all of that finalized and all of that, this is going to be much more exclusive, and the price is going to be raising dramatically. Okay, that's probably going to happen in, I would say probably March by the time we make it to Ninja 8. Okay, and then once we get to that point, I don't really care if I sell too many anymore, because for one thing, I don't want too many people to have this stuff. And for another, I don't need to get rich from selling indicators. What I do want to do is make this sustainable to where I don't have to dip into my investment accounts. I don't need to get rich off of this stuff. I just need to make enough money to pay 5 or 6 guys salaries and keep the development process that I've been working on going so that I can continue to create the tools that we need to do this type of exceptional market analysis and trading. You don't have to have Bloodhound, no, but for what I've been working on, we've just wrapped up probably the most difficult 2 months of development, trying to get, remember I showed you in the beginning these different Bloodhound templates and these quote unquote solvers. This entire system, to be able to do what we've done, to be able to access the different charts and all of that, we've done that with this new reader system, which was a complete nightmare to try to figure out, which is why nobody's ever done it before. So we finally got it. It's done. It's working perfectly. It's just really pretty incredible stuff. All of that is included. So when we moved to Ninja 8, these readers that are associated with each indicator comes as a part of the indicator. All right. You don't have to have Bloodhound or Blackbird to purchase the system, but if you do have it, then you'll actually be able to get these automated signals, which, I hesitate to call them automated signals, but essentially we use them in a kind of a semi-automated fashion. But with Blackbird, we can fully automate them. one thing that's not automated is the market geometry. And this is one of the things that I think scares people a little bit, is the whole market geometry analysis and having to learn all of that. But what I'm doing now, one of the things we're developing, well, we've got it all kind of documented, written out, how we're going to do it. I don't think it's going to take that long. What we can do with this toolbar to perform this higher level analysis stuff, which really has to be done by hand, we can export the files of our analysis, and anybody with this toolbar can then import our analysis. All right, what we're going to start offering when we get the toolbar for Ninja 8, maybe even before that, maybe even while we're still on Ninja 7, we're going to offer a service where you can subscribe to a market. I have no idea what the cost is going to be. It's not going to be astronomical, I assure you. It's going to be very, very reasonably priced, but you'll be able to essentially subscribe to a market and have the analysis that we perform populate automatically to your charts. So all you'll have to do is click on a button on each chart, or maybe it'll be like a separate user interface. With Ninja 8, it'll definitely be a separate little window. And then you can decide, which charts you want to update, and it'll likely be Josh. Well, of course, it'll be me, Josh, and maybe a couple of other guys performing the analysis on a various group of futures and Forex markets, maybe some stocks. And you'll be able to get that analysis directly onto your charts, which, that's what most of our morning consists of, is drawing the market geometry and lining up the areas to identify where we actually want to trade. And of course, the reason we do that is because it works so incredibly well, which, that's not a subjective statement. That's a pretty objective truth. So at any rate, you do have to have, I guess that was a very long way of saying, no, you don't have to have Bloodhound or Blackbird. But if you do, the system that we've put together now it'll make it easier, I think, to learn once we get everything finalized with this thing that I'm describing that will populate the analysis we do automatically on your charts. I think it'll be easier to learn that way. And, we'll actually be able to mark up the charts and write out what's happening, what it means, why it's important. And that will show up directly on your chart. And it will also, the lines that show up on your chart will then be able to be read by Bloodhound or Blackbird to automate those signals. And then, you flip a switch and you say, okay, well, I don't necessarily want to trade right now, but if it does come down to these areas, then yes, I would take that trade. So I'll turn it on. And then if it doesn't, and it, goes back the opposite direction, say, okay, well, I'll turn it off for now until I've identified an area that I'm really interested in. That's kind of the direction that we're going. And we'll likely still have the trading room, but this would open up our analysis to anybody that has the toolbar. So at that point, to subscribe to the analysis for the market geometry, you wouldn't have to have the entire package, okay? But you would have to have the toolbar. And then you could subscribe a little less expensively to individual markets for a monthly fee and get the analysis in real time every morning, have everything up and running, ready to go. All of your charts are marked up, and then it's just a matter of execution. The way that I set this up right now, the Master Suite, it's on sale for $49.95. That's everything. That's with the Volume Analyst, the Divergences Pro, the toolbar, all of the other indicators we use, the Ninja Manager, all those different things, and the entire written method, the 150-page book on the market geometry, all of my rules and guidelines written out, all of the training, and all of the Bloodhound and Blackbird templates. So if you invest in the Volume Analyst now, then you'll be locked in at that price, even if, it's next year or sometime thereafter. You'll be locked in at that $49.95, which is what it's on sale for today. Okay. So if you wanted to upgrade after the volume analyst, then you can easily do that for a much lower rate. Okay. So that's kind of the way that I wanted to structure this for you guys, because I know it's a lot of money to shell out, and especially when you've already done it 5 or 6 times. You know, I think first one that I bought, I think I paid $10,000 for it, and it was a total joke. It was garbage, basically. It was just repackaged indicators that were, you know, available in most platforms, or you could have programmed for $200 or $300. With what we're doing, it's a valid method. It has a real edge. It's, you know, you're working based on the actual truth behind what drives price and what governs price movement. That doesn't mean you're going to be right. Maybe, you know, I would say most successful people that trade, if anybody ever tells you that they have a winning percentage higher than 75%, either they're lying or their risk to reward is upside down, and they're going for, you know, something like a 5-tick target with a 10-tick stop or something ridiculous like that. So if that's the case, then, you know, they've got to make 80% winning trades to make money. Most people that are doing this properly and their risk to reward is proper, it's, you know, actual realized reward is larger than risk on each trade. Typically, you'll find even 40% winning trades can make money. And if you can get closer to 50% or even 55, if you're doing incredibly well, 60% winning trades, then you're making a pretty astronomical return. You know, maximizing that reward to risk is really what this is all about. And this is about the only thing that I've discovered or put together that can actually do that. You're finding the exact areas where the market is likely to reverse. You're not going to be right 65, 75% of the time, but you will be right way larger percentage of time with this than you would with any other system that I've bought and tested out there. It's actually pretty incredible. So let me go through some of these questions here.